Welcome back, everybody, to the Financial Advisors Workshop. This is the show hosted by Four Star Wealth in Chicago. And here's where we interview great colleagues of ours in the financial advisor business. There are literally millions and millions of families in America that work with a professional financial advisor. And on the SEC side, the Registered Investment Advisor side, there's so many interesting ways to do it. And today we've got Kirk Licata, and Kirk is out in Buckhead, Atlanta, which is a great neighborhood, and that's where a lot of wealth is in Atlanta, isn't it?
It is. It is.
Well, welcome to our show today.
Thanks, Brian. Thanks for having me. And to clarify, I live in Buckhead, but our office is a little bit north of Buckhead, but in Atlanta. Yeah.
Excellent. Atlanta's a great city. A lot of wealth in Atlanta. We talked about you have the busiest airport in the world. I mean, there's a lot of great things going on in Atlanta. But Kirk, you've been in the business for about 11 years, and you have a decent sized practice. Tell us a little bit about how you got into business originally.
Yeah, sure. So, went to college as an 18-year-old knucklehead and just tried to figure out, well, at least here, what do I want to major in? And knew I liked numbers. So financial management it was. And so I did financial management, minor in accounting, went down to Clemson, originally from New Jersey. And I left Clemson, of course, with bachelor's of science in those categories. And, I left Clemson and realized that one of my greatest attributes was kind of the network that I had built there, going there, knowing no one, and feeling like I had just this great network that I left with. Came down to Atlanta, really just said, I want to get to Atlanta and figure my life out from there. I didn't know what I wanted to do. So I thought I could go one of two ways. First being some type of financial job, financial analyst. I didn't even think about financial advisory at that point, and the other being sales. So I just set up a bunch of interviews. One of them ended up being with Mutual of Omaha, who at the time, to me, opened my eyes that I could blend the two of finances and sales. And so at that point in time, I took that job with Mutual of Omaha, kind of selling me the financial advisory, what would be the long-term goal. But after a time, I realized it was not really going to get past insurance sales. And insurance sales is important. It's a piece of the puzzle. So learned how to do that, was having some success. But was a sponge in the industry and quickly kind of learned where I wanted to go next, and was fortunate enough to make a connection. A man named Wes Bigler, who was the CEO of my current firm, LongView Wealth Management, started asking him some questions to the point where he said, okay, you've got enough going on. You need to be down the hall from me instead of calling me all the time. And he brought me over to LongView at the time. And I was 23, 24 at the time.
Okay. Nice. So you got it in the insurance side. So now you look at it today, and you're doing a lot more than insurance.
Right.
So how did that help you, do you think, that you got in the insurance side originally?
It helped me to realize that there are so many folks calling themselves financial advisors that are really only looking at one piece of the equation,
Right.
and are frankly salespeople, right? And that's not what I wanted to be. I realized the help that was needed and felt like it was a comprehensive financial plan that was needed, and not just whole life insurance solves every problem, or annuities are the only way, right? I mean, I don't have anything against either product, but they're only the right fit in a certain situation where they truly are the right fit. So just wanted to go somewhere that was independent and could give me the tools to really learn how to advise folks on a comprehensive and high level.
So tell us a little bit about that. So you've expanded from being primarily insurance, and tell us how you've layered in different programs that are more comprehensive for clients.
Yeah. So when I came to LongView, of course, got the licensing to, I guess I actually already had the licensing for selling investments, if you will, but, within a few years, was able to get my certified financial planner designation. And, there were some folks here that really had a process for, even just charging for a one-time financial plan, or, every meeting was really looking at, net worth and cash flow, estate planning, investments, insurance, risk management, and seeing how all of these pieces together, you can't advise them one without knowing what's going on with the other. So it's a very, robust process. Takes a lot more work than just managing, an investment or selling someone an insurance product. But that's why, we have ongoing relationships, because people's financial plans change all the time.
Exactly. So, talking about financial plans, when you're doing insurance, you were probably not doing financial plans. So now you're doing more planning. What kind of tools do you use to do that?
So we do have a software called Naviplan, which I love. It's like a cash flow based, projection system. And I actually, first 5 to 7 years, I really show all of these great reports from Naviplan, and my meetings would take forever. And then I realized a few years ago, I'm over presenting here. People want to know the brass tacks. Let me try to get down to 1 or 2 pages of relevant information, and a net worth and cash flow. So I bring an agenda, a net worth, and a cash flow statement, and that facilitates my conversations in all my meetings. And just really trying to give people actionable advice to take with them after the meeting. Hey, here's what I'm going to do from our end, and here's what you need to do from your end. Let's check these things off the list, and we'll follow up to make sure everything gets done.
So you used to use Naviplan, but now
I still do. I still use Naviplan, but I'm using it for my own purposes to come to my conclusions about, what are they on track to become financially independent, stay financially independent, reach their education funding goals, etc.
Okay.
But I'm just giving them the line item of, are you on track or are you not?
Right. Well, Naviplan is one of the most comprehensive systems for those of our listeners who are not aware of that. They're Milwaukee based, and it's really a supercharged program, and can do very, very sophisticated plans with that program.
Yeah, I love it. I love using it for tax planning. I think it does a really great job of, helping me project out what a client's taxes are going to be in a given year and then in the future.
Yes. And there's many other programs as well, Money Guide Pro and eMoney and such. Naviplan has probably more formats than any one, depending, but you have to decide how to use it, right?
Sure.
And you kind of scaled it back a little bit, because not everybody needs a 70-page document.
Absolutely.
Right. Exactly.
Yeah, I'll leave all of that granular detail. I'll comb through all that, really try to keep my meetings with clients, around an hour. So we all know that's about the attention span of an adult, if that. So, just, trying to condense a lot of great information into a 1-hour meeting.
Well, and one of the things that we discussed is that you focus on folks with highly volatile incomes. Tell us a little bit about that. I mean, and most folks don't have very high volatile incomes. So where do you find these kind of clients, and then what do you do for them?
Yeah, so I've been working with a good amount of business owners. So, a business owner can sometimes have a great year and sometimes have an average year and sometimes have a not so average year, right? So, that's where a lot of volatility comes in. And, sometimes sales professionals just can have years where their commissions are through the roof and years when they're not. So all of that becomes difficult to manage from a cash flow perspective, from a long-term planning perspective. And, so putting in some systems to make sure they're have a strong cash flow management system in place, but, so that their spending doesn't match their income. They have a great year, they spend a bunch of money. Their poor year, they don't spend that much money. And that's not really a recipe for financial success for anyone.
Right. So what kinds of tools do you use to help manage the volatile incomes? Is there a planning module in that software, or are there just things that you do customized that will help them manage that cash flow?
Yeah, it's going to be customized. And so, for us, it's a matter of saying, look, all of your income, you want to treat your household like a business. All of your income goes into an operating account, and then smooth out your monthly stipend, like pay yourself from there and make sure you have some type of excess and some level of emergency funds. And that would be the ideal way for some of these folks with volatile incomes to run their household.
Exactly. Very interesting. Well, good. And now you're a graduate of Clemson, and I know you go to a lot of football games. Do you integrate any of your college knowledge into that, or the whole culture of your college? How does that work?
Into my business?
Yeah.
It's a good question. I definitely have clients that also went to Clemson, and of course, have a network of folks that went to Clemson, but they're more in their 30s and 40s, and around my age. So some of them have the means to be clients, but a lot of them I'm just answering the phone and giving them some advice, and they'll come back later if they need me. But ultimately, yeah, no, I would say Clemson is, my past is a little bit separate from my business at this point, because I'm really trying to find those business owner prospects and those retirees that are looking for a tax efficient distribution plan for the retirement.
Nice. Well, you mentioned that you have been featured in CNN Money, CNBC, Forbes, Market Watch, and other publications. So how did that all develop? And then how does that work for you?
Yeah, so my associate advisor was helping me prepare for this interview, and he asked, I don't know the last time he read my bio, and he said, "What is this here?" And I said, "Well, here's my dirty little secrets. It's all true. I have a quote on all of those websites." But we were a member of the Financial Planning Association of Georgia a few years back for a while, and what they had was just something where they would offer media opportunities. And this was when I had a lot more time in my career, and I would always plug in my quote, plug in my opinion on whatever article they were looking for a subject on. And so I did. I got quoted on a few, and so I thought that was kind of an easy, free way for me to get publicity, for me to get some level of credibility.
Nice. So 11 years in, you have now your own way of developing business. Tell us that, like, how do you get clients? And then we'd love to hear about like one of your top 10 clients, like a
Sure.
typical family. So how do you get clients? And then let's talk about one of them.
Yeah. So I would say I kind of have like a three-legged stool for business development right now. And the first being kind of the long game, where I have just in my CRM a list of several hundred prospects from over the years that, maybe some of them are personal connections, some of them, I talked to, but we didn't do business at the time. And I just drip on them on a monthly basis. I try to put out something called Question of the Month, where I figure out what are the topics that people have been interested in lately. And I pick one and I answer it. And I just have a link, to my Calendly that they want to schedule a call to talk further, they can do so. So that goes out to hundreds of prospects every month. That's more of a inbound marketing technique. The other thing that I do, and this is actually just more in the last 6 months, is called Smart Asset. So I don't know if you're familiar with that system, but they have a system where you can pay for leads. Essentially, they spend the big money to bring people to their website and get them to fill out a survey and request some financial advice. And then I will be on the other end paying Smart Asset to get that contact. And I'll be one of 3 people to have a chance to speak with that prospect. And then, take it from there. Maybe they're a good fit. Maybe they're not. Maybe they don't answer the phone. But I have actually had some success there. I've learned it's good to just know, well, what are people most interested in? And the topic that I found people so interested in is, how do I withdraw from my retirement accounts in retirement? So I focused more and more on that. And, the third being everyone's most important way of getting clients, and that's referrals.
Mhm. So let's talk about referrals. How do you get them? How do you cultivate them? And how many do you get?
Yeah. So let's see, how do I get them? I really just, would say that doing great work for my clients, and then at the end of the meeting, asking them what they found to be the most valuable. And then just letting them know, well, if there's anyone else in your life you think that would also find XYZ valuable, I'd love to be introduced to them. And trying to keep it light. I had expected nothing from my clients. It's not anything like that, but just letting them think about it from that perspective. Like, wow, I did really find this tax planning very valuable, or the way he helped me consolidate my accounts and think about my financial planning. Maybe, my neighbor or whoever, everyone knows someone, right? So just getting it out there that I am still accepting new clients. These are my areas of expertise. That's what I would say is the most important for letting folks know what it is that I do and who I'm looking to meet in regards to referrals.
So
I
you,
don't know that. Go ahead.
you specifically ask for certain types of people.
Yes. Yeah. I would say, in regards, I'm especially going to do this if this is a client household that I love working with and I want to recreate. Right. And so if they're a business owner, for example, and I'm helping them with certain things that are unique to business owners,
Mhm.
I'm going to ask them whether they might know someone else in their network that also has those same needs.
Fascinating. Good. So how do you differentiate yourself? I mean, there's a lot of ways to do this, and there's as many ways as there are people. Um, so what is your niche? What is your secret sauce to get people to work with
Yeah. So I think the kind of mindset shift that happened with me more recently actually is to realize that yes, it's a game of numbers. There's lots of folks out there that need help. But to me now it's more of a game of numbers of who fits my ideal client and who's a person that values paying for advice, right? That's not everyone. That might not be 20% of people. Like, I don't know what the percentage is, but I've just realized, I'm not out here trying to convince a do-it-yourselfer that they need to hire, right? Like, I need to give them some good points and let them do their thing, right? So I'm just looking for the folks that, fit my niche, being, business owners that are retirement focused, have volatile incomes, and need some help understanding how to organize it all. And then, retirees that they don't want to overpay Uncle Sam, right? And realize, oh, maybe there's certain ways to structure my withdrawal plans that could make a big difference. And they have to be willing to pay for that advice and want a thorough, ongoing relationship, because I'm a little bit particular. I want to know everything that's going on. And I feel, I don't want to say burdened with my clients' ability to succeed, but I take my role in their life seriously. So I really want to have my ducks in a row, and that requires a lot of work. So I'm not going to charge a small fee to do it, because I can only manage so many relationships that have that much of a robust nature.
Great. Interesting. So do your clients have access to that Naviplan system? Are they able to get there? And
They do not. No, I
okay.
actually have never had. I have some clients that would be interested, to do a screen share and maybe look at different scenarios. I've done that with them before. But as you mentioned, like Navaplan is a beast of a system, right? So to let someone, to give someone the reins and try to figure out how to work it. I mean, it took me a long time to feel very comfortable using it. So I'm absolutely willing to show anyone at any level of detail they'd like. But I would say all my clients, 95% of them don't want to go into that level of detail.
Very interesting. Well, good. So let's switch gears a little bit here, Kirk. This has been a pretty rough couple of years in the financial markets. Last year was terrible. This year is kind of sloppy, although we're seeing a little bit of a rally again.
Sure.
But the rally's been concentrated in mostly in 7 stocks in the S&P, and not up very much. And the S&P, to the extent that it owns those stocks, it's up big. And of course, the Nasdaq is up big because it has those stocks.
Sure.
So, what are you saying to your clients now about investing? It's been a year and a half, almost 2 years that we've had this really weird environment. Are they getting sick of it? And how do you handle these clients?
Yeah. So I was just reading an article before we got on the call. Nick Murray, I think, put out his blog yesterday, and I guess we're down 5% from the all-time high of January 2022. And when you think about all of the carnage that's going on politically, geopolitically, monetarily, I mean, that's actually not that bad, and that's without dividends reinvested. But that's just the S&P 500, right? And so last year, bonds had their worst year ever, right? And that was definitely my hardest year in the industry because you had conservative investors that were just not ready to see that level of decline in their bonds, right? I mean, no one saw it coming, and so that it was a difficult year. And as you mentioned, S&P 500 has just been the place to be, and it's very concentrated now. And why would an investor choose to look at anything else? And so,
Yep.
We do have to remind them why, right? And for retirees, especially, you have to remind them about the 70s and the 2000s. And those were 2 decades where US stocks made no money. And if that happens to you as you're withdrawing from your portfolio, it's trouble time. That's what we don't want. So, we're not in a phase of just looking for the highest growth. We're looking for the most safe way to withdraw what we need to withdraw to live our lives. And that requires a diversified portfolio. And yes, you're going to have exposure to the S&P 500. So we're all positive in a year like this year. We're all negative in a year like last year. And we're all trailing the S&P 500 for years and years we're here now, right? But that may or may not be the case. And, we don't want to be greedy.
So, considering the strange nature of the markets, have you done any more diversifications into maybe alternatives or liquid alternatives and other areas that wouldn't be as volatile as what the stock market was?
Yeah. So on the bond front, we have what we would call a bond alternative. So it's a fund that we use that uses an arbitrage strategy and combines it with an option strategy. So it's just trying to get bond level returns without the interest rate risk. And that is the level at this point without, so a good deal of my clients have investments in alternative ways, so different limited partnerships or, real estate investments outside of their liquid investment portfolio. But beyond that level of alternative at this point in time, I am not looking elsewhere because ultimately I want to be correlated long-term to stocks. It's a good thing to be. You just have to make sure that you have a level of liquidity for that the client needs to ride out any downturn there.
Sure.
So that's always the message, especially in good times, that I'm preaching to clients. Expect and be prepared for 30 to 50% declines in your stock, the stock side of your portfolio. And if your finances can't handle that, well, we need to either have less stocks or, if they can, then we can have more.
Absolutely. Well, good. So, and what do you think of, we've had gold as something that people can rely on, or they thought they could rely on it when the markets are rough. And then Bitcoin became the new gold. Everyone was buying Bitcoin. And then gold started to act better again. Then it wasn't. Now it is again. What do you think of precious metals? And then what do you think of Bitcoin here? Are you involved in those? And what are you telling clients now?
Yeah, Bitcoin has been very interesting, of course, to view from afar. I own none. I have no desire to own any. It is, I'm not smart enough to put it frankly. And maybe in the long run, we might say I was smart to know that as well. I don't know, but to me, I invest in what I understand. And what I understand and what I believe in is the ability of the management of companies to consistently grow their earnings, no matter the environment that they're put in. I mean, we've seen the struggles over the last 50 years that these companies have had to endure, and we've seen how they've come out the other end. So that is just a method of investing that I'm the most comfortable with, and that I feel will, yes, we have these very volatile times, but to me, it's the most conservative way to go long term.
Interesting. Well, you have a really good plan. And Kirk, one of the things I like to say as we near the end of our discussion, that, there's going to be about 300 people that see this in the near term, and probably 1,000 advisors and maybe some clients as well over the next year. And so just like you listened to some of the interviews before you came on the show, what would you like to tell your brethren in the industry now that you have the floor? You're in an auditorium and they can all see you and they're all listening. What would you say to your brethren and colleagues in our industry?
I mean, like we talked about before we began, there are so many different ways to structure this business, especially if you're on an RIA platform.
Mm-hmm.
And it took me a long time to determine the exact way I wanted to run things. And I feel like I'm at this point where I'm really taking off now. And so if I could do it all over again, I would really encourage someone to attach themselves, if they're just getting started, to an advisor that has their same values, and they feel strongly that they want to emulate that person, and maybe not just work as their associate advisor if possible for as many years as it takes until they just feel confident in branching out on their own. I didn't do it that way. I started, 23, 24, just trying to get clients, and it was very, very stressful. And in the long run, I was able to make it work through sheer stubbornness, but I wouldn't advise anyone take that path. I think there's a better blueprint. I think you can understand what value you're bringing to the table a little bit better from day one. And if you don't, you need to, latch on to someone that does and can really teach you over a number of years until you have that level of comfort.
Nice. Okay. It's good message. I would ask you, now that we're nearing the end of 2023, and we're having a presidential election next year. Markets officially bottomed October of 22, at least a recent bottom. So it's a year later, and we're still not breaking those bottoms, and we're not breaking the highs either. So what do you see happening over the next couple of years? And let's talk a little bit about the future. What do you see?
That's a tough question to answer, Brian. As everyone knows, I would definitely just tell you, just like I would tell any of my clients, I'm just not in the business of making predictions. I will definitely say that when the market drops, I feel more comfortable investing, right? I am a little bit, when things go on sale, let's be simple, right? Things go on sale. It's usually a better time to buy. And when they're through the roof, which is when most clients want to come to the table with their money, we need to be more cautious. So, uh, everyone's trying to figure out what's going to happen with interest rates. Are they going down? And if they do, what would that mean? And we just have to stay the course and rebalance our portfolios to their long-term strategies. And if we do that, it's gonna enable us to buy low and sell high. You do those things, you're not going to lose in the long run. You're gonna come out and have a successful investment strategy and a successful lifetime as an investor.
Nice. Well, Kirk, you have a really steady way about you, and sounds like you've built a really good client base, and you have a program to track everything, and it sounds like they're very loyal to you. It sounds like a great practice, and you're a great example of our industry and the goodness of our industry. So congratulations on your success. And thank you for being with us today on the Financial Advisors Workshop.
It was a great time. I look forward to talking to you in the future.
Excellent. Well, we'll keep in touch, and we'll leave it there for today, Kirk. And thanks everybody for being with us. And we'll be back again with another great interview with another great advisor, just like Kirk. And we're in Atlanta today. We could be in Washington, could be in California, who knows? But we'll find the best people and interview them. And Kirk, you're on that list.
Thanks, Brian. Thanks for having me.
Thanks so much. Thanks again, everybody. And we will leave it there. Bye-bye now.